Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing you the real news and informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. thelightpaper.co.uk.
Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Good morning, guys. It is 7:58 on Monday, the 16th of February 2026, and that means that we have completed 3 years and 46 weeks of this roughly 8-year FIRE journey, or FIRE experiment, if you like. Just a quick look at the situation before the figures reset. Market close on Friday down 0.1%, 0.19. The current price for the Vanguard S&P 500, £95.40. That is down a little bit on the previous. You can see the red at the end of the graph there. If we take a quick look at the portfolio itself, currently the portfolio value sitting at 31,000. Return on investment down slightly to 29%. Albeit that represents growth of 7,000. We have 326 shares in the portfolio and an average purchase price of 73.93.5. So before we take a look at the notifications, let me just draw your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up, how'd you get on?
It's a draw. Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
You can go now.
Rude. You make Monzo Monzo.
Okay, so as noted at the bottom there are affiliate links in the description. This week there are 3. There's one for Monzo, of course, one for Smarty Mobile, and a third for Trading 212, in fact, which is the platform you're looking at on screen currently. Basically, if you choose to sign up in the next 2 weeks or so, provided you follow the terms and conditions in terms of funding your account and you use that affiliate link, both you and I could get free shares. I think they're randomly selected and up to £100 in value. But I always hasten to add that I wouldn't want anyone to do that unless you've already done your homework, unless you've decided that investing in the stock market is right for you, and that you've already looked at the various platforms available, and you have settled on Trading 212 as your preferred choice. So in other words, if you were going to open an account with Trading 212 anyway, then I would say yes, please go ahead and use that affiliate link. If that's not the case, please ignore. By all means, use the links for Smarty Mobile and Monzo, as there is no risk with that. Okay, so just looking here, the market has opened this morning. Opened down 0.1% already, and it doesn't look as if there's any massive surprises just yet. Let's have a look at the notifications. Moderna jumps 7% as strong Q4 results and aggressive cost cutting offset falling vaccine sales. DraftKings slides 12% as prediction markets cost and weaker outlook eclipse strong Q4 results. Safran jumps 7% after raising 2026 profit targets on booming jet engine service demand. Pinterest down 18% as CEO blames tariffs for Q4 miss and weaker forecast. Rivian up 16% on strong Q4 results and optimistic production guidance. And then we've got the upcoming holidays. Let's just have a quick read. Monday the 16th of February. So today is an official holiday in the United States and Canada. President's Day or Family Day, just depending on where you're located. US and Canadian markets will be closed for trading. Okay, so that could mean that there won't be an awful lot of change today in the S&P 500, given that it is an American index, although the version of it that we're looking at here is traded on the London Stock Exchange, and therefore it is actionable, I suppose is maybe the right word. Regular viewers to the channel will know that each week I buy £120 in a theoretical portfolio. So this is the trading platform this is the practice platform on Trading 212. Our £120 of the Vanguard S&P 500 exchange traded fund is going to buy us roughly 1.2.5 shares at the current market value. I try to trade where possible on an open market, and although this is a closure day in the States, the London market is open, so we're going to go ahead and send that through. We actually were able to buy 1.26 shares for a purchase price of 95.19.5. Let's see if the figures have updated. It does appear as if they have. Now, as I say, because the market opened slightly downwards, we've lost a little bit of value off the portfolio, although it's not that apparent. But current portfolio value now after that weekly investment, 31,200. Return on investment down slightly at 28.75%. We now have 327.5 shares in the market, with an average purchase price now just over £74. That has come up slightly. So I don't think there's an awful lot more to go through, really. Maybe just the some of the fundamentals. Why use the Vanguard S&P 500? Well, the S&P, or Standard & Poor, is an American index of companies listed on the stock market. There are something like 3,000 plus companies listed in the market, and the S&P 500 is simply the top performing 500, so the top sixth or so of all those companies. And the beauty, if you like, of buying an index fund or an exchange traded fund, to give it the proper title, is that as time goes on, some of those top 500 companies may swap places with companies in the wider index that are performing slightly better than those currently in the index. And from that perspective, it can be said to be self-cleansing. So of the top 500 companies, if there are some that are underperforming, gradually they will fall off the bottom of the index and be replaced by others that are doing better. And historically, when you look at the returns provided by the S&P 500 over 20, 30, maybe 40 years, on average, and it's important to stress that it is an average, they tend to the index tends to provide a slightly better than 10% return per year. There are years where the return will be negative. There are other years where the return is significantly more than 10%. But as I say, that is the average when looked at over a fairly long period of time. It is true to say that the market falls as well as rises. If we look back on the left-hand side of the graph here, back to February 2020, you can see the COVID effect is still just about possible to make out on the graph there. It's not going to be too long until it actually disappears into distant history. But what was remarkable after the fall relating to COVID was the V-shaped recovery, just how quickly the market rose again and got back on track. And in fact, by I would say about September, looking at that, the market was back where it had been, and then continued on an ever upward path up until around about the time of the Ukraine conflict, where, as you can see, there was a bit of instability. Then again there was another surge, and the halt, or the catalyst to the drop that followed that surge, appears to have been Donald Trump's tariffs announcements. But again, we see another V-shaped recovery. So if we say that the fall began around February 25, I would say that the market was back on track again around about September. So again, a few months later, and since that point, obviously the market has continued generally in a positive direction up until around about January this year, and then we see this gradual decline. Now, I had suggested in a couple of previous videos that I did kind of expect that there would be a bit of a decline, if not even a fall, and that partly has to do with essentially when you listen to economic indications, the cost of living crisis is not so much talked about these days, but what you will hear is locally there are continuing business closures. Town centres don't appear to be doing as well as they used to. The nighttime economy has suffered as well, and the general impression appears to be that people just don't have a lot of spending power in comparison to maybe where they were a few years ago. So I suppose it's fair to say that people have cut back a bit on their discretionary spend. They are perhaps saving more rather than spending and borrowing, and that has had a knock-on effect in the economy. I've also seen a couple of videos on YouTube here and there suggesting that house prices are on the decline in certain parts of the UK. I don't think we've seen it much as yet in Northern Ireland, but it is fair to say that houses do appear to be remaining on the market a little bit longer than perhaps maybe they used to, and if we're not actually seeing a decline as yet, I do think we are seeing a slowdown. So the picture is perhaps not all rosy. It will be interesting to see just how far this pullback or fall extends. It certainly isn't the same kind of a shoot as what we had seen at the time of Donald Trump's tariffs announcements. It was pretty marked. This looks a little bit more shallow, but nevertheless there is the real possibility that it could actually go on for longer, and only time will tell. Nobody really knows. So guys, with that all said, that's really it for today. If you enjoyed this particular episode, why not give it a thumbs up? And if you're interested in following the journey, please consider subscribing to the channel. But other than that, all that remains for me to do is wish you a good week and invite you to join me next week for more. Thanks for watching.
Woke up one morning, saw the world in a new light. No more 9 to 5, I'm living my own fight. I got a plan that's simple, a number game to play. It's the freedom that I'm chasing, I'm walking away. They said it's impossible, just a dream so far, but I've learned to count the cost. Now I'm driving my own car. I don't need a mansion, don't need a fancy name. I've got peace of mind and I'm free from the daily grind shame. It's not magic, it's maths, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's maths, it's the way I live. Financial freedom's waiting, with all that I can give. I cut back on the clutter, I got my spending in check, investing in my future, no time for regret. The years go by faster, my money is working too. I got a plan that's steady and it's seeing me through. They said I couldn't do it, said it wouldn't last, but I'm retiring early, leaving all that stress in the past. I'm building my empire, brick by brick. The math's all adding up and it's working real quick. It's not magic, it's maths, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's maths, it's the way I live. Financial freedom's waiting, with all that I is maths and it's mine to take. A life of freedom, no more decisions to make.